Welcome to Green Disruptors, where we spotlight the innovators transforming our planet's future. Today I'm joined by George Kelly, founder of Earth Recovery Partners. With over 25 years in environmental markets, George has pioneered financing models for carbon, water, and biodiversity projects, bridging the gap between promising environmental enterprises and the capital they need to scale. From mitigation banking to groundbreaking joint ventures, he's redefining how impact capital can truly drive impact. Let's dive in. Welcome, George. Thanks for coming on Green Disruptors today.
My pleasure.
So we're going to talk about Earth Recovery Partners, but before we dive into that, you've got quite an interesting background in the environmental space. So why don't you give us a brief history of how you arrived at this moment?
Sure. Well, it's great to be here today, and I am in my fifth chapter in the environmental space, and started, as an environmental lawyer and practiced for many years, and then became a partner. And the year I became a partner, I created an environmental markets company, really tied to harnessing the mitigation policies in the U.S., but also looking beyond that. And that started in '97, and we evolved as one of the leading kind of regional enterprises in that space, focused on wetland streams, endangered species habitat restoration, using the offset tools under the Clean Water Act and Endangered Species Act, and then also emerged in nutrient trading and water quality trading and stormwater trading and forest mitigation and a whole host of offset kind of approaches around the U.S. That are driven by regulation, either federal or state regulation, and in some instances local. And we started that, and I will tell you, that was quite a journey, and we were in a space that the nonprofit realm had dominated. We were trying to make it more egalitarian. We were trying to create high standards and integrity in the system, and enable private sector involvement in finance. And so we created Environmental Bank and Exchange in '97, and then we merged in 2014 with a company called Resource Environmental Solutions out of Houston, Texas. And at that time, we went from 7 states to about 12, and then over time, we were in 20-some states, 1,000 people, and ultimately acquired by KKR in 2016. And so it's been an incredible journey in that regard, both the market development, the finance side, and then the just enterprise side of the equation. And then in 2019, I stayed as a strategic advisor of the board of Resource Environmental Solutions, but then created Earth Recovery Partners in 2022 to basically focus on helping young enterprises find funding or be strategic advisor in this space for carbon, water, and biodiversity, particularly those enterprises and projects involved with the environmental market side, or technology that supports that, nature-based solutions. So it's been quite a journey, and now we're on to the last chapter for me, but one that's quite exciting.
Yeah. So help us understand kind of what the problem is when a small environmental company is looking for funding. I've talked to a lot of people, and that seems to be maybe the challenge. So what does that look like from your end?
And apologies, I had a disruption briefly. What look like?
So the main problem for people you work with is securing funding. So maybe you could help
Okay,
us understand
yes,
why that's
yes.
such a big problem.
Yeah, and keep in mind when you think about carbon, water, and biodiversity spaces, one is those are all emerging areas. So that's point one.
Yeah.
Some of which are hit hard by policy dynamics at the federal and state levels. So that
Yes.
variability, that navigability has become a big issue. And then you're also tending to get a younger generation who are new leadership, have never been in it before, and so haven't had the
We
experience.
just
So you add
inexperience,
it
yeah.
all up, and it gets really quite hard for folks who want to just get catalytic startup capital. You can get friends and family dollars, but it gets really hard when you start getting into the kind of the pre-seed, post friends and family scenario. Gets easier when you're established and have have established a revenue stream, and there's predictability, and folks can look at that over time. But so that catalytic capital, that early stage, is kind of the hardest in this space. It's not oriented for venture capital, really. It is. We think it's disproportionately oriented in terms of the lack of opportunity, and so we want to fill that gap to really support that next generation enterprise. And one of the things we've done, among other things, is we've joint ventured with a group called Resolve to create Resolve Enterprises, which is a nonprofit, and so we will be a for-profit subsidiary of a nonprofit, similar to
Okay.
OpenAI.
Yeah.
And we are focused on mission line capital, and we're really looking at those emerging philanthropy scenarios where folks are going from grants to investment dynamics and looking for investment thesis, but maybe more concessionary in what they're willing to allow as it relates to repayment from a debt perspective, or more flexible equity. And so that's really important, and we've just entered into that last month, and that joint venture. The enterprise is called Resolve Enterprises LLC, but it's a joint venture between Earth Recovery Partners and Resolve to really focus on that. So we think that's really going to be a great opportunity for some of the younger emerging enterprises who we're working with. And then we have another joint venture with a traditional FINRA SEC licensed enterprise to raise some of the bigger funding, because a lot of the enterprises they get their funding and they move on, and then they need the next level of funding, and so we want to position ourselves to help all the way through the cycle. And so that group is called Earth Recovery Partners Capital Advisors, to cover kind of both ends of the spectrum. And that could be enterprise or project finance.
Yeah. I don't know if something you said earlier just reminded me. I've heard a lot of different people say that it's much harder to raise 20 million than it is to raise 200 million. And I think that's kind of that idea you were referring to, that the first investment is always the hardest to get.
Yeah, think of raising 2 million. The economies of scale aren't great enough, and the whole system is tied to volume, and that
Yeah.
and we're not. That doesn't worry us. The small transactions that enable the enterprises are what interest us in this chapter in
Okay.
our space.
So that is a really
So,
important
but
gap that you're filling.
we're trying and on that journey, but we're committed to be in the theme of your podcast, disruptive in some of the capital dynamics that are out there. We think impact capital hasn't been that impactful, and it may be more akin to being commercial rates and impact clothing, but we think you need to be a lot more flexible, catalytic, et cetera. And so we think the business model that we're putting together, this kind of joint venture with a nonprofit, is unique, and a model that we need to continue looking at. And we're fascinated with disrupting business models. We think the business purpose trust ideas that Patagonia has created, and these kind of ideas of joint venturing with nonprofits, are things that we ought to be exploring and looking at as we become kind of mission focused in how we look at the
Yeah.
money.
Yeah, I mean, I think on the disruptors line, it's like these challenges are unique. The technologies need to come forward, and so it's not a traditional industry in that sense, I guess. So you got to be extra innovative on every level. So I was gonna ask, do you have any maybe like case studies that you could share of like companies that you've worked with, or maybe you could also describe your like ideal type of partnership that you'd want to form?
Well, as I say, we're in that kind of carbon, water, and biodiversity space. Having been over 25 years in the environmental market space and having drafted a lot of the policy that drives the rules, we're very familiar with mitigation banking space. So we've helped small mitigation entrepreneurs find funding and interface with investors to position those companies best to get the optimum kind of investment, but also kind of educating our enterprises at their side of the equation of what investor is going to be looking for and try to match that before you go through significant iterations of investment memos circulating. So to try to say, here's the expectations, here's how they're going to look at it, and the same holds true for the enterprise. We're working on the enterprise side of the equation, and you really get to the heart of matters, and you're able to get deals done in a much quicker fashion. So we've done a couple of those. We've done market analytics for habitat bankers around the country. We're working with circular waste enterprise and finding funding. Now that is more the larger scale funding scenario because they're taking cellulosic material to make floorboarding and have the opportunity to do things around the world. We are working with geothermal enterprise and looking for enterprise investments, and they're playing a role of trying to maintain heat reservoirs for geothermal. We are working with reforestation in Brazil, habitat banking in Australia, habitat banking in UK. So we're not just in the U.S. as well, and I think that's a lot of these markets are emerging that follow the U.S. standards that we are well familiar with, and we think that's an opportunity to get U.S. investors and other international investors looking beyond their region. So it really runs the gamut, and we've had some technology groups that we work with that not necessarily they're raising funding, but helping them find new customers. eDNA, environmental DNA that helps for species identification, helping the network there, helping remote sensing for water quality analysis, particularly harmful algal blooms, using satellite imagery. So it has run the gamut, but I think the lion's share has been a big part habitat, circular waste, water quality, nutrient work, and then technology that supports those dynamics are things that we're pretty focused on.
Yeah. So as you mentioned, you're kind of in your fifth chapter. You've been doing this a long time. You've got a lot of experience. What is the thing that like gets you out of bed in the morning and gives you the energy you need to continue to do big, important work still?
Yeah, no, well, I think what gets me out of bed every day is I realize just how tenuous a position our world is in on the ecological side. And I don't think the world understands that. And we see, we talk about things like climate, and then you have fires and floods and droughts, and they're incremental. It's not like an oil spill that overnight just kills and affects everything, but it's an incremental crisis that takes shape over time, and our world is not paying enough attention to it. So, and for our next generation, I'm always of the theory that we leave this place better than when we got it in terms of generationally, and frankly, we're not anywhere near that, and it's quite a mess. So there's so much to do, and so many opportunities to support really great solutions that also are opportunities. It's not just the risk side, but the opportunity side.
Yeah.
And
absolutely.
I liken when you think about the Norwegian sovereign wealth fund that just announced that over 90% of their assets are going to be reviewed for nature risk. That tells you something. One of the largest asset managers in the world is looking at the long-term dynamics and saying, these are some of the most important issues of our day, and yet they're not giving credence in either our politics or necessarily the policy at state or federal level. So, got to keep pushing and using really innovative tools and get finance, making that more easy to make this an investable asset that has the value proposition that we all know is there. And so we've eschewed our decision making in a capitalist world because we don't value our natural assets. So that's the other thing, is how do we embed that value and how do we create systems to support that? So much to do. Those of us that live in the trenches like you, and we see it every day, just how tenuous a dynamic.
It's front and center all the time, but for most people, they have the luxury of being able to forget about it.
Yeah.
I wouldn't say it's a luxury. It's
no, but we need every unique tool in the toolbox. And look, I lived at one point lived in Maryland, and we were part of the Chesapeake Bay initiatives, and they would put a lot of money, public monies, towards restoration, but there was so much political dynamics, and we didn't clarify how you were spending the money, and so there's plenty of areas of efficiency needed in that regard too. Like, we can't just assume because you have a pot of money that you're solving a problem. And I think that's part of what we're trying to say. So we've been very active in the public side to say, pay for performance, pay for those solutions that are going to perform, and make private sector accountable to deliver the performance, as opposed to paying for a practice and then going away and not knowing whether those trees would survive or whether that restoration actually achieves the objectives you set out. So lots of opportunities, but it's not. It's all, we need to be more efficient and more focused on the dollars we spend about what they're doing as well.
Yeah, absolutely. So in terms of scaling a business like this, and with your unique business model, what are maybe the challenges of the moment?
And again, apologies, you froze for one sec, but what are the challenges in the
scaling this particular business?
ERP? Yeah. I would say right now we don't have a problem at all. We have so much work. And part of that is just because of the need and the times. I think creating predictable approaches, making sure we have the back end investment community educated, is a big part. Meaning, there's a lot of folks with money, but they're not as familiar with some of the programs that we're involved with and how they work economically. And many people have the assumption that, hey, you spend money in the environment, it's a lost leader and it's not a returnable proposition. But I think that, to me, is that back end inventory of investors and understanding and educating the asset class opportunities that we're kind of conveying. And then the other thing is just, a lot of the enterprises we work with don't have the cash flow dynamics. So how you navigate and create a model that supports those enterprises at the same time doesn't put an enterprise like ERP at risk. We tend to do commission structure funding, and that's good for many of the emerging enterprises, but that's also a risk proposition for us to vet and make sure that these are real opportunities. I would tell you, though, as the fifth chapter in my life in this space, we are much more, we're less hardcore on the economic proposition side, and we really are trying to support the enterprises to help drive them in every way. And there's, that's what leads us to some of the advisory work we're doing for a lot of these enterprises to help shape their revenue structure or even position or be a part of their business development team for a period as we grow the muscle memory of that enterprise. But that means we have to mobilize people and we're really committed to try to be lean and have an affiliate model and not hire too many people internally. We have 6 affiliates that are experts in many facets. We have strike teams on things like stream restoration, water rights, fund development, and all those things. And so we're building that capacity in an affiliate construct. So that's other new model.
In a way that's not going to cash sink you.
Not just do it under one umbrella, but to do it through an affiliate model that now allows nimbleness, and not too big of an enterprise at our level.
Yeah, smart. I mean, it seems to be that's the direction a lot of big business is heading anyway. So it makes even more sense in this space, I think. So maybe give us. Oh, go ahead.
Having employees is harder and harder. At Res we had 1,000 employees in 20 some states, so there was
wow,
quite an enterprise.
Yeah. Okay, so you spoke a minute ago about having to educate the investors. I'm curious, how do you find these people? It's like you got to find them and then educate them, and those are 2 challenging things, I'm sure.
Yeah, so as I mentioned, there's kind of 2 buckets. One is that Resolve Enterprise bucket, which is tied to the concessionary capital world, and the other is the ERP Capital Advisors bucket, and that's more traditional. In both those instances, there are already a repository of investors that we have worked with. Resolve has worked with foundations, family offices, CDFIs, et cetera. And we have 2 in the conservation finance space. So we have our own inventory that we're building, and we know of them, but it's growing. And then in the ERP Capital Advisor side, which is more traditional, we have an investment banking partner that has their inventory. We have our inventory of folks. But what's really interesting also is the emerging role of AI in this space. And then there's over 3,000 organizations that call themselves impact capital. So there's ready-made folks that you can tap into, and each has their own specialty. But I think it's over $5 trillion of so-called impact capital, according to the Global Institute of Impact Capital, and that so there are a lot of folks emerging that claim impact. You have to weed through that, but they're on lists as well. So all of that
I can't answer the phone.
To say is
sorry.
No worries. Is to basically all of that is to say there's emerging enterprise investor community, and then the key is narrowing down kind of the specific focus, their orientation, their sweet spot of return. Are they equity debt? Are they focused on carbon? Are they biodiversity, water, or technology only? There's a lot of categorization of that. So a big focus of ours to build those tools and also build on the experience of folks who are already involved with us. So that's where we are. It's a journey. So we're fairly early in it, but we also have such a strong network of folks. We can almost immediately identify opportunities for some of the scenarios we're involved with.
Okay, very cool. So maybe we can kind of wrap up with the question of what do you see the next 6 months looking like in terms of the growth?
Well, for us, I will say to you that we our growth is heavy in the concessionary capital side of the equation. We already have 5 enterprises in the pipeline. We have another 5 we're vetting. We have in the ERP Capital Advisor side, again, that's the more traditional funding side. We have about 5 to 7 of those. We have a lot to swallow in the next 6 months. Plus, we have about 7 advisory pieces of work where we're working with large-scale institutions that own 1.8 million acres of land, evaluate environmental markets for them. We are helping fund development for indigenous communities in Canada, working with our affiliate team member who's a fund specialist who ran Patagonia's fund. I think the next 6 months is about execution for us. It has not been an issue about building our supply pipeline. Frankly, every day, every week, we can add to that, but we have to begin the execution. So we're super focused on delivering the finance scenarios for a couple companies that need it in the very short term. So that's we know that the investment cycle takes at a bare minimum 3 months. So we're working hard on that scenario. So I would say execution while we continue to build our pipeline, but our pipeline is pretty darn full at the moment.
Pretty healthy. Well, that's great to hear. Yeah. And honestly, I'm happy to have come across you because I'm sure there's people I talk to that I think I need to point in your direction, because it's like a main concern for a lot of these companies getting started. So.
Yeah, well, it's great to be on this podcast, and thank you for doing what you're doing and spreading the word. And I think one of the things in our journey in the enterprise side, as you get bigger, the people get very territorial in their own little competitive posture. And one of the things we're committed to do is saying we really want to build the ecosystem around trying to drive the opportunities for the benefit of all. And I love that. We think everybody benefits from that. And so we are absolutely willing to talk to anybody on those issues to support what they're doing and build that ecosystem. And there's a book called Interaction Field about new business models and this issue,
add that to my list.
Really creating the flywheel around those opportunities. So we think it helps our business to be in that way. Even though I've lived historically in a very territorial world about sandboxes and don't tell anybody anything and that kind of thing. So
I think that's the old way. So if somebody wants to get in touch with you guys, what's the best way to find you?
The best way is through my email or my partner's email or the enterprise email. My email is kelly@earthrecoverypartners.com. Or you can go through our website and contact us there, or LinkedIn, whatever is easiest for anybody on that.
All right. Well, thanks so much. I appreciate you coming on today, and I appreciate the opportunities that you're going to be providing for people who need it so much.
Thank you. Really appreciate it. Have a wonderful day.
Thank you. That was George Kelly of Earth Recovery Partners, a leader committed to making environmental innovation investable. From funding early-stage carbon, water, and biodiversity enterprises to building global partnerships, ERP is changing the way we finance a sustainable future. To learn more, visit recoverypartners.com or connect with George on LinkedIn. And as always, thank you for tuning in to Green Disruptors, where the future of our planet meets the power of innovation.